Hello everyone, I'm Giuseppe Basile, also known the Fib Stalker, and welcome. Tonight is Sunday, October the 30th, 2016, and happy Halloween to all of you. It's 10:40 p.m. Time here in Toronto, and in this video I'm going to review for you the four futures plus the US dollar pairs here, the US dollar Japanese yen, US dollar Canadian dollar, US dollar Swiss franc. So let's start from the S&P 500 because we have some work to do. If you followed my analysis the last few years, or at least in the last few weeks, you should know that the S&P 500 it's currently in a lateral move on top of an area, which is actually sitting on this area controlled by dump money here, and this is the area on the weekly time frame. So still reacting to longs in this area. It is possible for this market to break this level. If that happens, there are a number of traditional technical analysis indicators that are actually supporting this price here, but it is very possible for this market to break, as we mentioned in the last few weeks. And if it does, market is going to briefly and briskly move into the next dump money long area here, which is the monthly area here. Within this monthly area, there is also an area which is controlled by algos, and that's the level that I mentioned since the last few months. That's the 2020 level here, and it's possible if the market breaks, will react initially to this level, but then will only get participation from algos if and when it gets into 2020. So there's really not a lot to do in this market. This market is moving laterally here. There is a sequence of lower lows, as you can see here, and the dump on is actually pushing this price lower. So last week we saw this price reacting to the 2142 initially reacted higher. There was support from smaller time frame smart money long, but then when the market actually hit that trend line there, it started moving lower. So this market can still move higher and even retest that 2142 here, but it's very possible that it will encounter resistance from the daily dump money as well. So short-term, lateral, and intermediate, this market could actually correct. Moving to the dollar index, there were a lot of calls and apparently a lot of urgency on the dollar index due to the reversal on Friday. That's profit taking. Also, don't forget this market has actually broken the back of the shorts here, and when that happens, a correction is in the cards. So this market could continue higher from here, but if it corrects, it's probably going to retest previous highs and 97.70. That's the level I'm going to watch for this week, and that's the behavior I'm going to anticipate for this market. This market could continue higher from here. It's testing. We'll start testing an area of dump money long here, so this market could just get into this area and then continue higher, which actually supports our view on the euro dollar. Really nothing has happened to silver and gold here. Let's start from weekly silver here. Silver is on top of this area of support. And this is the old wealth way back from the lows in December to the highs beginning of July here, and we know that this market it's obviously trading longs here, but at the same time we know very well that if the dollar will continue higher, this market is likely to correct. So if this market continues higher, there is an opportunity maximum into 1866 that would correspond to the end of the correction for the dollar index. So that's where we can see, that's where I can see this market moving to according to what algos would do in order to support a continuation lower, which means a continuation higher for the dollar index. There's no indication that the dollar index is going to reverse. If this market continue higher, this could be an opportunity for a short. Gold has not behaved as anticipated last week. We saw a reaction to this level. This is an extension short that we indicated, but the market went above it, and on the weekly time frame, though it's still within this area of monthly bears here, although above that area, and you could encounter resistance here from the weekly dump money here. This market can still continue higher, this for a bit, and this does not change anyway the view that we have this market. In order to get any kind of participation to the upside from the smart money, we need to retest the 1230 level here. So it's not impossible to imagine anyway a market that could hover around and then continue lower this or next week. Okay, not really a market who's giving us a clear trend and clear edge here. So this is not a market we have to trade if there is no clear indication. Let's move to the US dollar Japanese yen. The US dollar Japanese yen has seen an obvious correction. What I want to notice though is that our trade has been completed almost to the peak here, and the second target has been tested. Those who follow me and have seen the previous video and also the recommendation in the last few weeks, this is the daily time frame, and we saw the market trade this 103 level, which progressed into the first target, and as I mentioned last week, eventually the second target. This has been tested. There's been only a few pips from this second target, so this second target has to be considered hit, and the next measure move has failed here, so this could suggest actually a deeper correction here. This market at the moment is trading 50% of the current move, so this could actually continue higher, especially if the US dollar the dollar continues higher. Now, if that's not the case, this market is going to come and retest the next measure move here, the 103.69. This is a weekly level, and when we look at our trend following, we can see that this level lines up with the participation from the daily bull money here. Okay, so this is the next level. If we see a larger correction, congrats to all of you who took the signal here and took profit at around that second target, as we mentioned, as I also reiterated last Wednesday on FX Street as well. Okay, so going forward, so we could see this market moving higher. If the markets move higher, let it move. Eventually will come back to offer us an extension, and if that's the case, I would also prefer it, because then we would have a lot of room to get into 109 here. US dollar Canadian dollar, as anticipated, this market had a bullish bias here, and last week I mentioned that this market could actually challenge this extension short that has been tested twice, but then last week we saw the market moving into it, and this week we're likely going to see the 134.86 being pierced on the upside. And this brings us to another level that we have to watch, and that's a level I gave last week as well, and that's the 135.79. So If you're long, you should stay long this market. We're going to see the 134.86 being pierced on the upside, and then profits are to be taken at the 135.80 because that could be an area of resistance, at least temporarily, for this market. And if that happens, then on the daily we're going to capture the next opportunity here. It's very bullish chart, bearish for the Canadian dollar, obviously. And what we see here, we see that 135.80, that's where we are going. There is a setup that is bringing price there, and the first target was touched last week, as you can see here. Let's see, 134.40. The high was I-34.32, so I will not consider this hit just yet. But clearly this price action is pushing price higher, and now there is a potential for price to get into that second target, which makes the test of these 135.80 shorts, if there is any participation, much easier as well. And if you keep following me, I'll tell you how to test the level. And so what we are looking for is market to getting into this 135.80 and even higher into this 136.40 possibly, before we can actually study the behavior of this price and see whether there'll be any reaction. Notice that the weekly and daily dump money are long this market, and they won't allow this market to move lower very easily. US dollar Swiss franc here, we saw this market actually challenging the 50% level here, and this 50% level has been respected here last week, as you can see. Very sorry, when we look at the actual when we look at the actual 50% and we trace it in the right way, we can see that that level has been pierced. That's an indication of strength. So the bears were not capable like they did before they were able to keep this price below the 61.8% level for 2 times, and then the third time that failed, which means that the retrace of this market is actually bullish. So this is profit taking. There is the possibility to actually consider a position long if and when this market retests the 98.20 here, and that would be also on top of a weekly long area here. So this would be an opportunity for us to trade this market on the long side here around 98.20. Okay, so this is everything today for this week, for the week starting today, October the 30th, 2016, and we reviewed the 4 futures and US dollar related majors. Thank you very much, and I'll see you in the following videos. Bye bye now.